three big things are happening in our lifetimes that never happened before. Let me say that again. Three things that surprise us that haven't happened in our lifetimes, but happened many times through history, are the creation of an enormous amount of debt and debt monetization. The second is the internal conflict, the large wealth gaps and the internal conflict that makes the politics of populism and so on. And the third is the great power conflict, comparable powers, the United States and China, and the possibilities of war. There are very basic, simple things. That there is a debt cycle. There are short debt cycles. We're used to those. They last on average about 7 years, give or take about 3. And you have recession and interest rates are low, inflation is low, and the Federal Reserve becomes stimulative, and then you have growth. You have non-inflationary growth, and you have inflationary growth, and they tighten monetary policy, and then they slow up over the recession that follows until the cycle participates. We've had 12 of those. We're in the 13th. So the level of interest rates, you have to satisfy a debtor and a creditor. And so that means interest rates have to be high enough that the creditor gets a real return, higher than their money. And if you don't do that, you create the cycle that we have before, where money is essentially free, interest rates are nil, or in some cases negative, and you have a situation where you don't have to pay principal, so money was essentially free. Then that imbalance is enormous, and it's made more enormous because even then the supply-demand is not adequate. There's not enough demand to buy those bonds. And so the Federal Reserve's got to come in there and print money and buy those bonds and redistribute wealth. So you have that difference. So now we have moved to a level of real interest rates. Think about inflation. Those days that we have seen in the past are over, and there's a big adjustment in that. This is a different kind of debt problem, in that what happened is, in order to create this big transfer of wealth that there needed to be in various ways, the government borrowed a lot of money because they spent a lot more than they earned, and they sell a lot of bonds. And then the Federal Reserve buys bonds, and it subsidizes those bonds. And so the big losers of this cycle has not been the individual balance sheets, because the individual balance sheets have been improved. So the central banks have all lost a lot of money. The commercial banks bought a lot of these debts. So when we look at the commercial banking problem, it is largely a government debt problem, because there was the financing of holding bonds with short-term interest rates, and so that was the squeeze. The higher you raise the debt to income ratio, the more difficult that balancing act becomes. The inflation issue comes from two parts, really. First of all, if you spend a lot more than you earn, and you give a lot of money in credit, you're going to have inflation. But it also comes from the supply-demand of bonds. So if you look at who's benefiting in this, the household sector, the workers, are benefiting. This isn't a classic recession in which the unemployment rate goes up, because the unemployment rate is remaining relatively good because there's wealth transfer, and you have, and they are also having higher wage gauges. And then you have the inefficiency of the global supply chains, which happens there. So what that means, I think, is that you have this stubbornly high inflation. We're not going to go down to our targets for a number of reasons. And then there has to be the real interest rates remaining high in that. And that creates a sort of stagflation kind of environment. It's a matter of the amount of money and credit created. And it's also a matter of productivity. And so when we look at the amount of money and credit, we will spend a lot more than we will earn. We know the budgets, we know the projections, we know individuals. The big risk there is a supply-demand risk. In my opinion, we are at the beginning of a very classic late big cycle debt crisis. And you have also a shortage of buyers. What's happening now, as we have to sell all this debt, is we then do have enough buyers. There are changes now in terms of the quantities in the world that are being held by large investors around the world that have lost money in these treasury bonds and so on. And then there are geopolitical changes which are having an effect. Some cases, some countries are worried about sanctions, and then there's this geopolitical shift. So when I look at the supply-demand issue, there's a supply-demand issue for that debt. There's a lot of debt. It has to be bought, it has to have a high enough interest rate. When we look at the buyers, there appears to be a shortage, a significant shortage of the buyers for that government debt. But we're now at the brink of being able to see what that supply-demand picture looks like as we go over the next year and two. I think over the next 2 years, the real question is, can we have a strong bipartisan middle, or are we going to have that kind of fragmentation? We have three things aligning that are concerning. On this short-term debt cycle, I call it, the 7-year cycle, we're about halfway through. In other words, interest rates are now at a level that they're probably going to stay at, but they're probably not going to rise much from here, and there's tightness. And the consequences of that are going to be a weaker economy going forward. Things are going to get worse in the economy. There's a financial issue at the same time as you have this internal conflict. So I think that that's going to make for a risky situation, particularly then when we deal with the third major influence, which is this conflict, this geopolitical conflict in the world, particularly related to China, Russia, and the implications that has on supply chains, production, and the like. Irreconcilable differences on a number of topics. Taiwan, Russia, so there's quite a bit of brinksmanship. And we are also heading into a political year here in which there's going to be more pressure. Both sides are very worried about this. Soviet Union, mutually assured destruction was the means by which we got through that. That notion of pushing each other will be just do not cross certain red lines. For 25 years, I would always write down my investment principles, all my principles, and then I would convert them to algorithms, which became decision rules, which became systems, and everything would run, and they would, like setting up a computer chess game, it would play, I would play next to it, and we would then reconcile differences and we would learn together. Now what's happening with generative AI, and then to go beyond that, to have it as a partner, a thought partner, because the intelligence has capacities that the human mind doesn't have. We don't, the ability to process so much and everything at the same time. So I'm extremely excited. I think that this is the greatest revolution, bigger than the internet revolution. The problem isn't with the technology. The problem is with the people who use the technology. Will that technology be used to raise humanity's living standards, or will that be used for war? If we take the next 5 to 10 years, in the next 5 to 10 years, it's like going to go through a time warp. We're going to come out the other side, and you're going to see a very completely different world.